Bears versus Bulls. So before we get started, I'll do a quick sound check and video check. Make sure that you can hear my voice and see my screen. And we're going to get started and with our analysis for the upcoming week. And we're going to be looking at the calendar of events that are coming up, as well as some really interesting developments between Russia and Ukraine that could impact the market. Okay, so let's go ahead and get started. And let's see that. Let's get our risk disclosure on the screen. Make sure you understand all the risks associated with foreign exchange trading. And we'll do that right there. And then we'll go ahead and give you a moment to peruse that. And again, welcome to Bears versus Bulls. And let's go to the economic calendar for this week, the week beginning really Monday, December 6th. And we're going to be looking at some of the currencies and the news around those currencies. First up, on Monday, we have the market construction PMI out of the UK. Previous number is 54.6. If that number is weaker than expected, then we expect the pound and the pound pairs to take a dive. So we want to be watching the pound is going to be what we're going to be looking at. 4:30. It's going to be 4:30 a.m. Eastern time, so it's going to be pretty early in the morning. But if you trade the London session anyway, it's going to be right after the London Open. London Open is 3 a.m. Eastern time. And so when we look at the news, think of the news as like a rock, a big rock, and think of the market as this quiet pool. And when they throw this rock into the pool, it creates ripples. Okay, and those ripples cause price to gyrate and to move in various directions. Okay, so that's what we look at the economic calendar. If you don't look at the economic calendar, it's one of your first things that you should look at, and that's on my checklist. If you go ahead and send me a message in the chat, I'll get you a copy of my trader's checklist. We want to look at the economic calendar. That way, we're not blindsided by news and other things that are popping up that other professionals and institutions are watching. Sometimes you can get in here at around 4:30 using our system, and then trade that announcement for an hour or so and have 10, 20, 30 pips and then go back to bed. And I'll teach you how to get in contact with me if you want to find out more. But let's go ahead and move to the next announcement, which is they're going to be at 22:30 military time. Think, Greg, 10:30 p.m. That's going to be the RBA rate statement. Oh my goodness, rate announcement, rate decision from Australia at 10:30. That's going to be very big news for the Australian dollar, Australian currencies, and sometimes it impacts the New Zealand dollar as well. As we know that when a central bank makes an announcement, now you guys know that there's only about a handful of banks that controls the $6.6 trillion a day market, and when those central banks, they actually set interest rates, and that will drive one of the major drivers of currency movement. Okay, so when the RBA is the Reserve Bank of Australia, RBA. In the United States, it's called the Fed. Okay, but these are central banks, not your Bank of America, or Westpac down the street. These are your government central banks that control monetary policy. They set interest rates. They basically set the supply and demand of currency, right? If they want to increase supply, they print more, and that lowers interest rates. Or they raise interest rates by printing less money. Remember, they're printing this paper called fiat money, right? So this is going to be very big. So, you get in here, check this out. Check the Australian dollar, Aussie yen, Aussie. We're going to go over those currencies in the next part, which is going to be the technical picture. So for you people who still don't believe me that the economic calendar is worth looking at, the technical stuff is going to come next. Okay, but I'm going to go. These are like your vegetables. You're going to eat your vegetables. Eat your Brussels sprouts and your broccoli. They're good for you. Fundamentals are good for you, especially the way I use them, right? Because we're going to only trade in those pairs which have news, because that's where the party is, right? You don't want to go to a party with flat chips, no beer, and no people at the party, nobody dancing and no DJ, right? You want to go where everybody is. And if you're trading the Canadian dollar right now, or at that time, and you go, well, the Canadian dollar isn't moving. Well, it isn't moving because the party is not there, duh. I don't mean you, but, you know, the hypothetical guy, right? So you want to trade in currencies that have activity, because that activity creates volatility. Volatility creates trading opportunity. Okay. All right. So at 1850, oh, here we go. They really challenged my my military time skills. Let's subtract 12, Greg, on Tuesday. 12 at 650. It's almost 7. So that's going to be gross domestic product, or GDP. Quarter on quarter, Q on Q stands on quarter. Quarter's 3 months, right? That's going to affect the Japanese yen. It's going to be released from Japan. High impact. Japanese data has been impactful now. It's used to be you could ignore it. I used to ignore it, but you know the yen has been very strong, especially when you have threats of war and the stock market crashing and lower than expected non-farm payroll. We'll talk about that too. That just happened. The yen seems to be the strong pair. The yen and the Swiss franc. So you want to keep your eye on those pairs. And we'll talk about the pairs that will rally during this time of uncertainty that we're seeing right now with Omicron and and Russia and the crashing stock market, right? And and check this out: Bitcoin and Ether just dropped 10%, right? Overnight. I think we touched near 40,000 on Bitcoin. We'll look at that chart as well. So stay tuned. Stay tuned. And if you're enjoying it, if you're enjoying what we're doing right now, give me a thumbs up, a like, or something. Let me know that you're out there and that you are actually viewing. Okay, just give me a thumbs up. I'm looking at, if you have a question, you can post it in the Forex Cash Machine chat. Here, if you haven't joined, go to the THE Forex Forex Cash Machine .com, and then you can join by that link. Colin, Arnie, hey buddies, thank you. Okay, I thought I was like talking to the wall there. Okay, all right, nice to see Colin in there as well. All right, so let's move right along. Moving right along. Again, the yen very strong. There's some interesting stuff going on. Wednesday, more interest rate decisions from central banks. The Bank of Canada, or BOC. That's at 10 a.m. Eastern time on Wednesday, December 8th. And that's going to be powerful. We want to check out dollar CAD, check out CAD yen, check out CAD Swiss. The party is going to be in the Canadian dollar at 10 a.m. Eastern time on Wednesday, December 8th. So stay tuned. Take off, you hoser, Okay. And then we have a speech from the RBA Governor Lowe at 5 p.m. I would avoid trading around that 6 p.m. Eastern time. Usually there's low liquidity and the spreads wide out like crazy. You'll get 20 pips spreads. You'll get slipped. It's a real ugly situation. So, hey, you don't need to, you can, whatever Governor Lowe has to say, we'll have to wait for a couple of hours while the market settles down. So 1,700 news announcements, take them off of your radar. Okay, let's jump to Friday. Okay, December 10th. I guess nothing's going on Thursday, so you can take the day off, right? Usually if there's no news, what will happen on those days of the week where there's no news, that currencies will just trade within support and resistance, right? They'll just ping pong back and forth. They'll play a little ping pong game between banks. But when the news comes out, boom, that's when you get the trend breaking out, counter trend, or in the trend. You'll get those big moves. But you can scalp, and that's why I teach in my course how to scalp the market. In fact, Arnie is a member. Colin, I think you signed up too, right, man? Yo. There he is. I see him. And so on Friday, that's where the big day comes in. Lots of big news. The British pound is going to be in play at 2 a.m. Eastern time. We're at manufacturing production month on month. It's not MOM, M-O-M. It's not MOM. We love MOM. but it's month on month, right? One month compared to another. Negative 0.1 was the previous number. No forecast is given. Its impact is high, so we want to look at what's going on with the British pound during that time. Now, in the Elite Traders University course, we it's like we have a crystal ball, may have a little crack in it, but we can forecast price several bars ahead of time, so it gives us the edge when we go into the news, right? That's why I like trading the news. If you don't have an edge, then it kind of sucks. But when you have an edge, it makes it a lot easier to trade. Okay. Also, GDP coming out of the UK at 2 a.m. as well. So back-to-back, two big announcements coming out. And then you're going to have about 6 hours. So you can go back to bed, wake up. And at 8:30, which is the normal news cycle for the United States, is the 8:30 a.m. news cycle, which is an hour before the U.S. stock market opens. And then there's a 10 o'clock a.m. news release cycle as well. Okay. Like non-farm payroll came out on Friday, and let me talk about that a little bit. Now, expectations, wonderful expectations. These are economists who predicted, who did all these projections and all this math and all this stuff, MBAs and up the wazoo, and they said there are going to be 611,000 jobs created for November, okay? This is December. It's released the first Friday of December, and they missed it by 400,000. Only 211,000 jobs or 210,000 jobs, 200,000, roughly 200,000 jobs are created. So it's a 400,000 job miss. Okay, this is the biggest economic announcement in, the NFP, right? That's where because the jobs create workers who create money, who buy goods and services. And since we're just a big import buying country, we buy other people's stuff, right? So if Joe American is not working and not getting a job, he can't buy stuff, and the global economy goes into hell in a handbasket, okay? Because we have a big consumer, 70% of our GDP is sales and consumerism and buying. So that's why, a lot of people say, well, the United States, they're self-centered. It's where the money is. You go where the money is. And NFP is where people, if you're an exporter in Taiwan, you're looking at NFP, okay? If you are, selling oil in Dubai, you are looking at NFP because Americans buy your oil, Americans buy your chips, and if they don't have a job, then guess what? You are going to be out of money, and that's why we saw the stock market sell off dramatically on Friday, right? And we'll talk about that. We'll show you the technical charts of that, just abysmal, right? So, but that was released at 8:30 a.m. Eastern time on Friday. And one of my students by the name of Jeff, he really scored it big on NFP. He just did a number of trades. He just crushed it. He had the direction of the market, and he just this is his. So he's in stage 3 of our course. Stage 3 is when we use a small live account. We went through stage 1, which is simulation. Stage 2 is demo. The third stage is a small live account. And so you can see that all the live trades he did. And he said, okay, well, there's $2. But again, it's a small live account. So every single one of his trades was right. Why? Because he had the market direction. So when we are able to look at that ahead of time, we're able to game what's going on here. Consumer price index, 0.9%. That's CPI. CPI, anytime you see CPI, that's going to, the I they say is index. It really stands for inflation. Inflation. CPI, consumer price index. They call it an index, but the I is for inflation. And things are, going up. Price of oil, price of food, price of chickens. Everything's going up, right? Because of the supply chain disruption, right? Now, inflation is bad for, the average consumer. But guess what? Currencies go up in value for a time when there's inflation. Why? Because they're thinking that our Fed, our central bank, is going to raise rates. Okay, if we raise rates, then that means you can put money in U.S. bonds and get a safe interest rate. A lot of people will be glad to get 1.75 or 2%, and it's guaranteed good faith backed by the U.S. government. The U.S. dollar is the world's piggy bank. That's one of the currencies that benefit during this time, right? Because everyone else has, I think the Eurozone has negative interest rates. Switzerland has negative interest rates. Sweden has negative interest rates. And maybe, you got maybe 2.25 or 0.50 on interest in New Zealand. The big game in town is going to be the U.S. dollar. If they want safety during a downturn in the market, people run the U.S. dollar, right? In fact, if you go to our, right here, we go to our heat map trader tools, lots of tools here. We've got charts and financial news stream and market hours, but you can go actually to central bank interest rates, click there, and it will tell you what the interest rates for each of the major countries are. And you can see, Japan is negative, Euro is 0, Canada is 0.25, United States is 0.25, but you got to look at their 30-year treasury. Their 30-year treasury is like 1.65, right, which is a lot higher. Now, some of these countries have really high interest rates, like 17.75 in Turkey, but you see what's happening in Turkish lira. They have to increase their rates in order to get people to want to keep the Turkish lira up, right? They keep the Turkish lira from devaluing. And Russia, some of these countries, God bless them, but their economies are the value of their currency drops, and so no one wants to hold on to it. So they have to have a very high interest rate to get people to hold on to it, right? So that was. Let me get right back to our economic calendar. I just had to show you a little part of my market heat map. Again, we're having a sale, heat map 75, and I'll get 75% off. Just use that code at checkout, and it'll take 75% off for a lifetime subscription. Okay. All right. So, that's we'll go to next week. And sometimes you get a little pop up and you have to close it up. Okay. So, that's next week. Okay. Yeah. Consumer price index. This is X food and energy, which means consumer price index, the inflation data basically without food and energy. Well, I use food and I use energy, so I don't know how useful this number will be. You can tell that I use a lot of energy and a lot of food, right? Now, and that's year on year. They have a year on year number. They're going to compare 2021 to 2020, right? And month on month, they're going to compare November, with, December shouldn't be out yet because we're not done yet, but still comparing, November to October, right? And there's an increase. So what you want to do is either trade the dollar CAD, but I would like to trade, look to trade the euro. The euro is in a steep downtrend. We'll talk more about that, but the euro is called the anti-dollar, okay? So it's like Solomon Grundy versus Superman, the anti-universe, Spideyverse, whatever not. So in this anti-universe, the euro is the anti-dollar. So if the dollar goes up, the euro goes down. The dollar and euro cannot go up at the same time because they're anti. They've been built that way to give investors a way to hedge their exposure, hedge their risk. So we're looking at trading the euro. So again, we're going to be looking at the pound, the Aussie, the yen, and the CAD, and the euro for coming up this week coming up. So let's go ahead and get into the charts, okay? And we can a couple of things. I'm actually going to go to. Yes, let's go to the charts. Okay, that's a wild chart there. Okay, but this is the Dixie. This is what I want to start with anyway. And you can see we had a nice bit of demand zone at 89.57 here. And see, we're in a downtrend. The dollar, the pair was saying the dollar is dead. The dollar is dead, right? We bounced. It rallied up. Bounced again. We have a classic double bottom. And then we had a break of the 20 was 20 period moving average, and now we've been making higher highs and higher lows. So the dollar has been in an uptrend. Okay, this is a bullish trend. This is a daily. If you go out to the weekly, it's about the same, and this tells you this is going to persist. The high we had before the big drop was at about 103, and we just dropped precipitously from there. And this actually, we had an old low back on February 19th, 2018. Came back, retested it, and price has been moving up. We moved through some supply zones, and there's open space. These big wide candles here, that is open space where we just fill that gap, So we can get to maybe 9781. There's gapping candles, big long candles these are, and he said, well, Greg, there's a candle there. Yeah, but see how usually these long vertical candles are really gaps in the Forex market. Forex is an indicative market, not like futures where there's a buyer and a seller and a price, a buyer and a seller and a price. These are indicative of, it could be someone making a price at the airport, or some type of currency exchange, or maybe a credit card transaction, because the Forex is a nice centralized market. So when you see a big white candle, it could have been these are mostly gaps. So just like in stocks, when you have a gap, usually price comes back to fill the gap. So if you look at these gapping candles, I'm just giving you a little piece of this is, Arnie's by saying, hey, you're giving away the Elite Traders University secrets. I go, no, it's okay. We're among friends. You guys are good. But see, we have gaps here from 98, this big wide candle there, big wide ranging candle there. So we look to fill that. So basically the dollar is in a uptrend, making higher highs and higher lows. And remember, when we trade currencies, we trade one currency versus the other, right? It's the Aussie dollar versus the US dollar, right? It's the euro versus the dollar, right? If the dollar is strong, the Aussie can't be strong. The dollar is strong, the euro can't be strong. The dollar is strong, the pound can't be strong. So we are already seeing strength. Once we understand where the dollar is going, we know where everything else, every other thing, instrument, you have to trade dollars for, right? If you wanted to get some pounds to go to Europe or go to England, you have to get rid of your dollars and take on pounds, right? You have to exchange. The dollars are being exchanged. If you go to the liquor store and want to buy some milk, you exchange your dollars. It's MILK/USD. We're exchanging. It's currency exchange. So with this type of a trend, it tells you where the other 8 currencies are going to go, right? So let's take a look. Let's start with, okay. All right, so the ones we're looking at, we have the Aussie rate decision coming up. So let's look at Aussie dollar, right? Ooh, wow, there's lots of, I can't believe all my lines came back. This is so weird. I had constructed this. You guys remember when I made these support and resistance lines? And I used to show them every week, and I was so mad that they disappeared and they got deleted or something. Well, they're all back. So these are lines I drew way back here, before everything got erased. So these were projected into the future. And you can see where prices are hitting those lines everywhere. And look at this downtrend, just breaking down, 100% expansion of this Fibonacci move, which we can just ignore because now we've already basically gotten, right? So this long gapping candle. Now eventually this will probably turn around and gap back up, but not anytime soon, right? So we've got this, we have this really long low back at 54.96 back on, this is the spike. This is the COVID-19 spike, guys. This is where everything fell off the cliff because of COVID-19. Right here. Right? My wife's birthday, in fact. Okay. So Brent price rallied up, right? And then lower high, lower low, lower high, lower low. And all this demands or supply zone got hit, and then now we're coming down. We're down here. And we're penetrating this. If we were to make a zone here, this is the Australian dollar. There's a chance that this could hold, and maybe we get a bounce from there because of the our rate announcement. That's probably why it paused right there, right? Because this is pretty extended, kind of oversold, and so maybe we get a bounce from there, but it may not bounce that far, right? It may do a little zigzag where we actually do a little bit of a bounce from this level, right? And then maybe bounce and then drop, right? So a lot of people will say, oh, okay, they start buying it. It's a bull, but it turns into a bull trap, and then we really fill in the other side of this paper heart I call the symmetry. The symmetry. You never made it like a heart when you were a kid, and then your teacher drew it halfway, then you folded it in half, and then you just cut it, and then you unfolded it. It was a paper heart. Well, that's what this is. You've got this one side is up, and then this was the middle part, and now we're forming the other half of this. So everything we saw here, what goes up must come down. So it's like a Drake song played backwards from the top, from the bottom of the top, and now we're here. No, we're gonna play that Drake song backwards. So the top to the bottom, and now we're there. So we're looking at a bounce. So really, in bulls versus bears, I am short term. I'm actually, I would be short term bullish, but actually longer term, medium term bearish. Right. So that's what I think about the Australian dollar. Okay. You like that? Was that cool? Okay. Let's go to the next currency pair. Let's go to pound versus US dollar, GBP USD. And get rid of that. That was a buy. That didn't work. Counter trend, Greg. Yeah. This is a paper trading account, and I try to take a bounce off there. So, but anyway, let's go ahead and this is the pound. Again, we can get a similar bounce. I was looking for a bounce from here. In my non-farm payroll kind of took it down, so we could take it back up. But I look for the same thing, a bounce in a zigzag on that. You can drop it down to like a 4-hour chart. You can probably get a better view of that. And then this thing is like right in the way. Oh, I can't hide it. I would like to hide. There it is. Okay. So yeah. So we got a double bottom right there, and that was a non-farm payroll drop. We could probably see a bounce right there. Okay. But the trend is down, and what I want to show you is this. These are the currencies that will probably rally in an up move as a result of this Russian stuff. Euro Aussie, because Aussie usually rallies when there's good news, when the stock market is up, when the it's risk on, the economy is growing. Australia exports copper ore for pipes and copper wires. So, it's Dr. Copper it's called Dr. Copper, which is the indication that the global economy is growing because you need copper to build stuff. And Australia produces a lot of copper, right? However, if Euro Aussie rallies, it means people don't care about happy copper or whatever that is, and they want to move their money safety in the euro. Okay. So this is what that, so we see that will rally very strongly when there's bad news. I call it these are Armageddon pairs. If there was a zombie apocalypse, right, buy Euro Aussie, because I'll show you. He's like, well, Greg, I think you're exaggerating. No, if you go back to 2008, you'll see this was the financial crisis of 2008. This is Euro Aussie. I tell you, if there is disaster, buy Euro Aussie. Invasion by Russia, Euro Aussie. Zombie invasion, Euro Aussie. Plague. I think we did a rally after. We did a rally going into COVID, but then when everything turned around, it dropped, right? Now, when news is good and things are happy, Euro Aussie, we're trending in the direction of Australian dollar, right? But anytime like Brexit or something bad, see, this was COVID. Look at that, right? This is like the bad news bear. You remember Schleprock from Pebbles and Bam Bam, wowsy, wowsy, woo woo. He was a cartoon character that was followed by a cloud of lightning bolt over him. Well, that's Euro Aussie, right? And its cousin is Euro Kiwi, right? Euro Kiwi is the same because why? Kiwi, the New Zealand dollar is also a risk-on currency, a happy currency. When the stock market rallies and things, the New Zealand dollar goes up because it's the breadbasket of Asia. They have more sheep than people, and they supply food to Asia. So when people have money, they buy food. That New Zealand lamb, oh, wonderful, a little with mint jelly on the side. New Zealand has some great food, okay? And so when there's a good economy, global economy, the New Zealand dollar rallies. So if you see it going down versus the euro, that's telling you that, hey, there's bad news. This is the global financial crisis of 2008, 2009, and it skyrocketed. And once things got better, it dropped in the direction of the New Zealand dollar, right? And we can go to COVID, and we have the COVID spike. There is the bad news. It's a bad news bear, right? The Armageddon bear. All right, another one that will benefit. Now, we have tanks possibly rolling into Ukraine, 175,000 troops stationed around there, and we could drag us into some type of a war or a protracted war. And the markets don't like war, so that could be something to look at. Yen pairs also drop as well. So like Aussie yen, if you didn't want to trade Aussie dollar. Trading Aussie yen is like having your Aussie with a little wasabi. The Japanese yen is a little bit more volatile, and it rallies when things are good, and it drops when things are bad. And you can see, are things good or bad? All you gotta do is look here, right? Let me remove that. Right, so this is the Aussie yen, but we're coming to support, and again we have the Australian rate announcement coming in, and we have all this support coming in right here, 78.00 to 78.88, right? And so we may get a little bit of a bounce. Now I probably wouldn't want to trade the bounce. You can scalp the bounce, but I would rather take this. This is what you do. I'm going to give you another hint, another clue. This is anytime you have a long protracted run, take your Fibonacci tool. This is the Fibonacci, Leonardo Fibonacci, who he actually got it from the guys in India actually when he traveled, and the Arabic and Indian people were using this, and he put his name on it. Anyway, he's gonna be like the Columbus. We're gonna change it from Fibonacci to the Indian name of this process. But you go basically you connect these two lines, and you look at if this is our low back here, we should see a bounce, maybe even up to the 38% retracement, and look for sell opportunities there, right? And then once we look for some type of a sell zone right in here, So remember, we want to sell high and buy low. Okay, we don't want, not the other way around. If you sell the breakout, this probably will turn around on you and stop you out. So you really want to sell when things bounce up, right? So again, that's another tip I'm giving you: sell high and buy low, right? So again, this could be so bulls versus bears. I am really short term. If I were running in traffic to grab a couple of bucks off the ground, I would be a bull, right? But really, the best money would be waiting for this to short this. Let me get rid of the bull, Mr. Bull. Yeah, I am bearish. This is going down. Right. Oh, goodbye. Okay. So that's ASEAN. Okay. And so let's look at the euro, EURUSD. Right. Again, we are looking at, and see, we got a bounce, but it's been going down. See, there's our bounce there, and drop, bounce, and drop, bounce, and drop. And this bounce, so this is getting ready to drop. So I would just draw a trend line across this baby, across the lows there. We're bouncing off this 20. We got the 20 period moving average as the back. We have an old resistance line here at 1.14. That's a daily. Let's go down to a 4 hour. Yeah, you got a shoulder, a head, maybe a shoulder. We break here, that could send us down. So bulls versus bear on the euro. I'm a bear. I'm a bear. Okay. Okay. And with the Bank of Canada, so let's look at Canadian dollar, USD CAD. CAD dollar. Okay. And let's look at our daily chart. And it's screaming to the upside because this is why it's paired against the dollar, right? And we can see that we rallied into. This is probably where when I drew this out October, right? Well, guess what? That supply zone, that thing was for real, right? Boom, boom, and drop. But it dropped right into this old demand zone, right? And just blew through that little support, that resistance zone. So we're in the middle of this, but I think we get outside this because all the orders that were here were probably already filled, right? All these sell orders, and so now we have open space. Basically, we have an inverted head and shoulders, shoulder, head, shoulders. It's a great little pattern. We don't necessarily use it because we have other patterns which are much more profitable in the Elite Traders University. But technical analysis and technicians will agree that the inverted head and shoulders is a good pattern to look at. It's just late. And I'm going to clone this like a sheep. And we can take the projection from the head, the bottom of the head, to the neckline, and project it from the breakout point. We get something like 134.85. Now it's not going to get there overnight, and I'll probably be in and out of it down here somewhere several times and not hold it all the way up to here because I scalp. So all I need is 4 or 5 ticks on this, and I know I got an uptrend. Then I'm good, right? Especially if the Bank of Canada is dovish and doesn't raise rates as fast as the U.S., then we could break the supply zone at 128.80. And so bulls versus bears in the Canadian dollar, I am a bull. Okay. Good so far? You can type something in the chat if you would like to. Now let's look at Canadian, reverse CAD, maybe CAD yen. Now, yeah, I figure Canada is one of the 3rd largest suppliers of oil to the United States, to the world. It's an oil, it's a massive oil producer. But if fewer people have jobs and fewer people are driving cars to work and they're not buying gas, and so you're going to have, I've already seen lower gas at the pump, lower price at the pump as well. And I'm going to give you another hint, so you want to write this down, is that in the brokerage we used to teach that the CAD yen is a proxy for oil. And you go, well, why is that, Greg? Well, Canada is one of the largest suppliers of oil in the world. Japan has 0 oil. Okay, So they have to import like 100%, 99% of their oil comes from overseas. They have no domestic production. So if you take a oil producing currency with a non-oil producing currency and combine them, you basically have a proxy for oil, right? So oil had a big run, up to about $80 a barrel, and you can see that the corresponding the CAD yen rallied as well, and then we started dropping and dropping, and the yen's been getting stronger and stronger. And look, we're busting right through all these supply zones. We're busting through this one, and we should break through this one and maybe come even farther, down to the currently at 87.77. I see maybe coming back down to this old level of support that was tested several times. We can see like 85.40, so I'm like 200 pips, right? But I would drop to a lower time frame and wait for this to see this kind of rally up and. See, people are doing it. When it rallies, they sell. When it rallies, it gets back above the 20-period moving average. I lock and load, baby. And then, so bulls versus bears. I am a unashamed, unabashed bear. On the Canadian dollar, right? So that is that. Now let's look at how about crypto? Well, crypto's a lot smaller than the Forex market. In fact, you can roll the entire crypto and stock market into one day of the Forex market. But, well, BTC USD, baby, that's what it's all about, right? Let's look at the Coinbase numbers and boom, okay? Look at that. Look at that. Okay. Trendline break and a drop. We got as low as 42,293. Ay, mi madre. Okay. Madre santo. We gotta look at this, man. You got me speaking Spanish. I mean, Duolingo. Learn. Ay. Look at you bought it here, and all the guys like, it's going to 75,000, 80,000, it's going to the moon. No, you're getting mooned. That's what's going on. You're getting mooned. All right. Buyer stepped in. This is big. This is a very big wick. A lot of buyers stepped in. Maybe computer-generated programs, computer buying programs, because this came to a probably some type of a Fibonacci. Let me just remove all the drawings because I have a lot of top secret stuff on there I don't want you to see. Anyway, it's okay. Pause the video, rewind it. What did he do? But look at that. It came right to the 618, the 61% retracement, 4406. Came up, they squeaked just below it. Hit that line. There were probably computer program buy limits right there. And bam, it snapped back up, right? But we're on the other side of the trend line. So it's, we had this rising trend and now we're sitting below it. Lower swing highs and lower swing lows. We have the makings of a downtrend channel. Clone. Bring in the clones. There we go. Bring in the clones. So we might see a rally up to the 53.72 area. So this is a long tail, Nia Fuller, teaches about the spike, spike trading and the long tail rat and all that stuff, So, yeah, you might see a bounce. You might see a bounce. Like, I wouldn't short it now, but again, I want to sell high. So when we come up to this trend line right around 93.77, I'd short it. And then we have our shoulder, head, shoulder here, right? Might squeak above and go for that 56,000 whole number, round number area. And then eke above that line and then come cascading down. Okay. In fact, what we can do, again, we can go like Drake, go from the top to the bottom like this. And we can see, oh my God, 50% retracement is where I drew my line, right? There's a lot of congestion right there too. So it probably have a tough time coming back through all that. And so why? It's BTC versus USD. And I tell my students all the time, and in our group, I said, I don't know why you're buying that shit. I mean, crap. I mean, that stuff. Excuse my French. Because if the dollar goes up, everything that you buy is versus the US dollar. And, you know, the rumor, you know, like Mark Twain said, rumors of my demise have been greatly exaggerated. Rumors that the dollar is dead. You know, you got these newsletters. The dollar is dead. You know, cryptocurrency is the future. Blah, blah, blah. Not in this future, guys. You know, you understand that the U.S. Treasury market, it's hundreds of billions of dollars. And rich people are putting their money into the 30-year Treasury note and the 10-year Treasury note. They're sticking their money in U.S. bonds. Okay? And as long as that much money is going to bonds, you know, crypto is not that liquid to hold all that, right? Especially if you got these type of gyrations. You know, these guys are not, you know, the Warren Buffetts of the world and the Bill Gates of the world. This is not liquid enough for them, because if they put money in, they are the market. When they put in, it's so illiquid. If they go in, it pushes the market. You want a market so deep, so liquid, that you put your $1 billion in and it doesn't move the market. That's what liquidity is. Okay? That's what liquidity is. And I think a lot of people, you know, don't understand what liquidity is in the market. I used to work for a brokerage, I worked for a bank, and you saw yards. A yard is $1 billion of the currency. And you can move $1 billion of the currency in a $1 trillion market and not move it. Right? So, and if you move $1 billion into Bitcoin, you are going to move it. And you don't want to move anything when you have that much money, because you have no way of getting out. So, so the dollar is the most liquid. You know, they structured that back at what's that thing called, the Bretton Woods Agreement. You know, where the dollar is it's the reserve currency of the world. It is the Chuck E. Cheese token. No, you cannot take quarters and play the Chuck E. Cheese machine, because it only takes the Chuck E. Cheese token. Well, this monetary system, the token is the US dollar. Okay? And it's not going to be the renminbi or the Swiss franc. None of this stuff is going to replace it, because nothing is liquid enough. You know, and people say, yeah, it's paper, it's inflated, it's made up. But they don't care. As long as its numbers are big enough for you to put other numbers in, that doesn't cause the market to go up or down. But you can go in, get a return, and go out, and the market doesn't fluctuate a whole lot. Right? Just like penny stocks. They get pumped and dumped. Right. Why? They're not liquid. Because you put your $100,000 in there, you are the spike. You go, look, it's up, I'm going to sell it. Who are you going to sell it to? You are the spike. You sell, it drops, and you lose money. You go, but it was up. It was you. If you get into a market, even if you get in the currency market like 5 p.m. and there's no one in the market, you could move the market with your 100K trade, especially if there's no one there, and all of a sudden the spreads widen out and you're like stuck. Why? Because you're trading during a time when the Forex market is illiquid, right? So you don't want to be the only one with a lot of money in it. And so what people are finding out is they can't get out. They got in, and who are you going to sell to? Well, price just gaps to the next level. Each level of liquidity is a buyer. And the reason why prices gap is because there's no one willing to take the other side of your order, because it's falling so fast, no one wants it. So there's a buyer's strike. So you can have a stop here, and you won't get filled on your stop until it's thousands of dollars away from it. And that's another risk called slippage, major slippage, that people don't want to be involved in. Anyway, I am ranting and raving, but I care about you guys. I want to provide the best education in the small amount of time I have. I don't have 12 weeks with you, but if I had 12 weeks with you, I tell you what I could do. I could turn you into a professional trader. I have a system. I'm a professional teacher. I'm an award-winning secondary school teacher. I've taught secondary school and college and high school, and so I also worked in the market. So my delivery system of education is one of a 3-step process that takes you from simulation practice to practicing in the market to actually going live and then actually being consistently profitable. So if you want to find out more, a couple of things you can do. You can come over to Elite Traders University and you can come over to our website. You can download a free income boost blueprint. Go to elitetradersuniversity.com and you can go to Income Boost Blueprint. Get your copy of my guide that tells you all about the market and how it works and some really good tips and tricks. And if you want to learn more, again, this book is completely free. I won't spam you or send you a bunch of stuff. I hate that. I sign up for something, I get 1,000 emails the same day from the same person. I go, just be happy you got my email address, but don't email me all the time. And guess what? I won't email you all the time. I don't have time. Anyway, but if you want to learn more about the 4 pillars of to 6 figures, the Forex cash machine, pip and run, go over to elitetradersuniversity.com/get access. Claim your spot for our workshop, 4 pillars for on-demand trading, profits, and financial freedom in 8 weeks or less if you've never traded before. And that it's way, learn how my students and I earn predictable, consistent income every day without guesswork or overwhelm. Just click that button and you can register and watch the on-demand training as well. And actually, there's also a live training, and they're actually showing me, trading the market in that video as well. So, and at the end, you can also sign up for a free discovery call where you can talk to me personally, and I, spend an hour with me. You can put your name on the calendar. We get on Zoom, and I will show you the system and show you how it works. And you have an opportunity to actually take the system and use it for your own use. It'll take a little time to put it together. Or you can get my help, sit and find out more about how to get help from me at Elite Traders University if you want to work with me on a one-on-one basis, where we get your results faster. Now, DIY could take a long time. Could take you 18, 19 years like some people. Or you can really cut to the chase in 12 weeks, be ready to rock and roll and milk this market for all it's worth and crush it. Okay, so it's up to you, but everything is free. There's no hard sell. I don't hard sell. I don't need your money, frankly. My mission is to help 1,000 traders become professional traders, and it's so good. I've got some young guys who've been signed up, and they've got through this. They're supposed to go through a 3-step process. One jumped the gun and started trading right away and made $7,000. I'm going, no, you need to back off, go back to watch all the videos, But he was really excited, and his name is Armin. I'm talking about you, Armin. Yeah, do I have his he's a nice kid. Yeah. Met him in Maui, which was really, really cool. Yeah. So what is it? Like step process here. He says, "Hello, Greg. How are you, brother? So I don't know if it's beginner's luck or just have a magic potion, but I'm up 5 consecutive trades. I grew my account from 1,500 to 6,900 in a couple of days." And then he actually posted his account. Right? I'm like going, wow, that's really cool, right? So, no, results are not typical, but again, if those are kind of the results that we get for people, and you can check that out. If you like the My Market heat map, again, heat map 75 is the code that you want to use at checkout, so you can have you can get access to this. There's so many tools, not just the financials, the scanner where you can scan global stocks, Forex, crypto, and commodities and indices, but also as charting. Also, it has sentiment and different types of financial news feed and things like that. And that's a little sample. You can even come to the website, even watch though. Those will change and move when the market is open. All right, 6 powerful heat maps. This is one of them. The Forex majors. I look at this one a lot because it tells me, hey, the dollar is going up. The dollar will be up here. The euro will drop, and so these will move dynamically in real time, which is really cool. And here's a little commercial here. All right, guys. Oh, all right. Thank you, Asha. All right, guys. That's it for me. Okay, but you can always go to the website and you can watch it if the audio was low. Yeah, I never know how the audio from an audio from a video goes into live stream. But again, I want to thank you so much, guys, for watching, staying online, and share this with a friend. Pass the link on. Invite them to our group here, and if you enjoyed it, share it with somebody and let them know. Appreciate you. Help me create an army so we can unplug from this system. But it's kind of weird now, and we need this more than ever. So I need your help to get the word out, and we're on a mission to liberate the world. Let's do it. Let's make a change today. Thanks. Happy pipping. Cheers.